Hey guys, this is Haru Miyagi. I just wanted to have you join this webinar, and we're going to be covering some really basic stuff with you, and then we'll go into more of the trading strategies itself. So for those that are extremely new to charts, I'm just going to show you the advantages and disadvantages that you have as a trader. So a couple warnings I want you to read, and disclaimer is that trading does involve risk, that past performance is indicative of future results. If you decide to use these strategies, you want to test them out and make sure that you are in check, and realize that we can't take into account of your personal financial situation. So definitely consider those things, and that we're not responsible for any winning or losing trades. We definitely want you to become educated, okay, and that this presentation is for educational purposes only, and it's not financial advice, okay. But these trading strategies have proven to help traders, and that's something that we want to walk you through and show you the advantages that you have as a manual trader over any other software. Okay. Well, let's just talk about candlestick patterns at the moment, and kind of look at just the idea itself. So number one, just to get familiar with the actual platform itself, this is the day chart. So this is representing a whole day of data of what the market's done. Okay. And it closes one day, one day, one day, one day. So if you take this candlestick and you break it to the 1 hour chart, you're breaking it down into 24 of those candlesticks right over here. 24 of these candlesticks represents one day. And then if you go from the 1 hour chart, this one candlestick, if you go to the 1 minute chart, then you're breaking it down 60 of these candlesticks. So your point of views are going to be different on any time frame, okay? And that's something to consider, is you want to test these strategies out. They have proven to work on any time frame, but again, certain time frames say certain things to a trader, and we want you to look for the highest possible trade setup, meaning that has low risk and high potential trades, and giving you gain in your account. So obviously we're wanting to overcome the risk of losing trades. Okay, so candlestick patterns really is just give you a note. Each candlestick represents something, but a group of them is kind of going to give you some ideas of possibly the trade opportunity that you may have. And when you kind of coincide with support and resistance, which is support is on the bottom, resistance is at the top, okay, like this. And now it's not going to be an exact price, guys. Support and resistance is a general area, and you can see how the market has reacted here, here, and up here. Okay, so I'm just going to walk you through and kind of show a back testing as well as forward testing. So what you're doing in technical analysis is you're using historical price to project future price. Now there's only three type of markets. It either goes sideways, up, or down. Okay, so we want to look for the obvious trade setups that have probability for us. So looking at support resistance, you can see that this is support, bounces off once, twice, and then here's your third time, and realize that this is a pattern that we would want to look for to look to possibly trade back towards this resistance support area as a target. Okay, I'm just going to pull this line back, or this chart back, so you can see how amazingly these prices fit. I mean, look at this resistance, and it just ceilings out, right? Okay, and realize this is a wick. This is where the market climbs up to the top, and traders typically will place a buy because it looks like, and they don't wait for the close, and then it pulls right back in, okay, and it goes against them. Okay, so obviously trading is psychological. We'll cover some of the key elements for you to understand to use these techniques. But you can see it ceilings out here twice. What you're looking for is right here. Okay, if you want to be pinpoint accurate, you wait for this thing to close beyond that price, like this, pulling back in, then this being your stop loss, and then either waiting for an entry of the close or even entering right there. So you could have a really tight stop loss and pretty decent take profit back down towards the support resistance area. But like I said, I want to pull these charts back, and like I said, it's not an exact price. It's a general area that we're going to be interested in. So let's see how it pulled downwards. That's kind of like a wick on a bigger time frame, and you can see how it reacted there as well. Okay, but look at these lines. I just wanted to show you that these are areas that we're going to be interested in. Okay, and you typically only want to plot like 2 to 4 lines at the most on your chart. You don't want to clutter your charts, and we'll show you the multi-time frame strategy, but I just want you to make things as simple as possible. Okay, but look how accurate these areas are that the market remembers. And look at this thing. I mean, bounces right off there. Okay, so the concept is history repeats itself is kind of the idea. Okay, and I'm going to show you some currency pairs as well, seeing these things. And look at this thing. So what you're looking for in price action is here as well as here. So when the market came towards that price, that's the general area that we're going to be interested in. Okay, and for those that don't understand candlestick patterns, this is kind of like an engulfing type of pattern. We have kind of a longer tail, and you can have a small stop loss to big take profit back up to this high right here. Same thing back here, kind of does a double bottom. That means it bottoms out twice in the general area. This is called a pin bar candlestick, and then you can see it pulling back up towards this previous high. Market really struggles right here. This would be a false break. Now, looking at a small time frame, guys, you'd think that this thing would be going downwards, but it sucks right back in, closes even greater than. That means this is an engulfing pattern and trades upwards. Okay, so I'm just pulling these lines back, and you can just see how history really does repeat itself. Okay, and like I said, it's not an exact area, but this is probably the most accurate indicator you have is simple charts like candles as well as support resistance. Okay, so I should go to the front here. Now, markets typically have 2 ways to trade in. They either trade level to level, and I want to just show you these lines. I mean, it will just blow your mind. So I pull this all the way back here, right? Okay, and you can simply just trade level to level. So I'm actually going to take this one right here and put it down here. And just look at what the market has done right here. So this is information you would know, okay, once it happens. Then what you're looking for is the market approach that same general price area and seeing how it reacts. And you can see how it reacts. Okay, how it reacts. And you can see that this thing just kind of does a sideways market, then it kicks up. And look at this. This is a pin bar. Okay, that means it wicked downwards, and then a lot more buyers came in the market, closed higher. Actually, it's not even a pin bar. It's actually a spinning top in a way, closing within, and then here we have a breakout. Okay, just trading upwards. But let's talk about level to level trading. Okay, you can probably delete these 2 lines here that I have, but you can see that it goes from the bottom level to the top level. When I broke this level, it went to the top level, and you'll see that see how it broke this level, then came down to this level here that we had already as your target. Okay, so again, the market really does, and some of you are saying, well, should I just trade to the next line? Generally, again, you want to kind of consider your risk management. Okay, and you can see, you'll get to recognize, once we go through all these techniques, you'll get to recognize which ones that you're going to look to hold on, because this one, obviously, you can see it ran quite a big distance right there, and that would be a great trading day for it. Okay, but like I said, you want to practice this so you can see the results first and see how you can benefit there. So there's a resistance here. You can see it struggle here, and just because it breaks higher than a high here does not mean that the market is immediately going to rush upwards. Okay, just to let you know, because again, this is another beginner mistake, is some people think that because it closed beyond a certain price that it's going to continue going upwards. Okay, you can see it went up for just a few hours, and then it went against Yeah, and this one right here, this candlestick might have looked a little white at some point in time, and then it went against. Okay, so again, you want to plan where your risk level is, where you're going to place stop losses and take profits, and we can cover that as well. But I just want you to kind of just really understand that the market will make a decision on its own. And we want to trade in easy conditions. Like right here in this case scenario, this is really tough market conditions to trade in because it's really choppy, right? Okay, we want to see markets where we have a firm direction. Firm direction. I personally like the 1 hour chart, but any certain people like bigger time frames or smaller time frames. It's really more of a personality thing. Okay, if you want to sit around the charts all day long, then the smaller time frames may suit you. But I like the bigger time frames just because I don't have to sit there and puppy guard my charts all the time. Okay, so here we have an obviously a direction. Okay, obvious direction, and knowing that I could keep my stop loss right around here or within this candle itself. Okay, obvious direction. And then you can see that this market consolidates and then has a more obvious direction. We're only looking for these runs. And again, we can trade level to level. So here's resistance, here's support. So once it broke this high, we could look for closes higher to trade towards the resistance level. So that was a few pips there. It doesn't reach the high here. Okay, that's something you want to consider. And then you can see this thing just bounced down here. And this is more like a retest, and then it starts falling downwards. So right here, this would be somewhat a tough situation to trade in because this big red candlestick. And then you can see that this thing just kind of chops upwards and then pulls downwards. But again, we're looking for obvious direction. Okay, we're trying to stay away from these kind of market conditions. We want to see just easy runs. Okay, the easier runs is going to make things a lot better. And you can see that this resistance level is, I drew it back here on the left. See how price is reacting here? This is considered that double top. Okay, and it dings off of it again, and then it tumbles down to support. And you can see how price will react at the bottom here. Okay, so again, you want to practice looking at candlesticks and how they react. And the challenge I think a lot of traders have is being patient. Okay, waiting for that right opportunity, being able to be disciplined enough, and being focused. Because again, as a trader, you want to, if your mind's not in it, then you should pretty much just stay away from the chart. Okay, so it's better to be focused so you can have a clean cut, plan, what you're willing to risk and know what you're going to get out of the market. Okay, and your goal. So you can see that this market bounces right off support, long tail, kind of a smaller candlestick on the side, and then it just brings back up to resistance and support. Now again, support resistance is not an exact price, but you can see that right around this area is where the market starts to struggle. Okay, and then this market comes right back down to this level. Okay, then it bounces around this area, and then you can see this big candlestick. Then here's your pullback. Okay, even pulls all the way back here, and then you can see that it trades back up to this level. And then you can kind of consider this as a double top, but the tops are not about the same. This would be more like a neckline area. So once it broke that neckline, you can see that this thing just tumbles back down to this level. Look how amazing that is, guys. And then here you can see kind of a double bottom. Again, they're not about the same. This engulfs, this pulls back, kind of a retest, and then here we climb upwards. Same thing here, it bounces around. This is the market condition that you want to stay away from. You can see that this thing has a firm direction. Like I said, you're looking for the obvious trades. If it doesn't make any sense to you, don't place a trade. If it makes sense to you, then that's what we're looking for, is having higher profitability. So right here, again, we have this information. This is the general area that I'm going to be interested in. You can see we climb all the way back up to here in this area. Okay, you don't have to try to hit the top. You can go a little beyond this wick right here. But level to level, guys, I mean, look at that thing. Just kicking off the same support resistance level that we had on the left hand side. This again, guys, somewhat an okay market to trade in, but this is where it gets really ugly. This is where traders lose money because they're just trying to push a trade in and just to trade. They're not waiting for the obvious runs. Like right here, this is, you can see it, double bottom. Okay, one point of respect. This is something we can see. Here's your double bottom. Okay, you can get involved in there or wait for the close above that price. And look at this thing just run to that same level that we had before, guys. Okay, again, this is a beautiful run. And if you want to take it on a conservative level, you can just trade to this level. Okay, and you're just looking at the most obvious swings to help you draw these support and resistance levels. So right here, again, this is the same line that we had before. Look at this thing, right around this general area, it wicks downwards, and here's your support, and then here's your double bottom. Here's, a pin bar and another candlestick like a hanging man, and then it pushes upwards. Now realize these are hour candlesticks, so this can happen within a day or so. Okay, and once you have that day, typically you want to say I'm done, or if something that can help you manage your trade to eliminate the risk or moving your stop loss to break even. Okay, so the whole goal is to eliminate that risk. Okay, and having clear-cut decision making. So trading is all about business. If you want to be a successful trader, you got to be kind of in the same mindset of being a successful business owner. Okay, they kind of have the same attributes. Now, when people say that trading is gambling, it depends how you trade. If you have not been educated at all or haven't received any training, then obviously it's going to be a gamble to you. Okay, we're going to be looking at, and we can kind of cover how to eliminate the gambling and having statistics behind you to help you benefit. So like I said, just because it breaks an area does not mean the trade has to continue going downwards. Okay, so I'm going to kind of cover some ugly stuff with you. So if it breaks below, does not mean the market has to break out. Okay, here it comes back in and even closes all the way up. I mean, in order to possibly even be profitable that trade, either you would have your stop loss there, or you could have a small loss right there. So that's just some kind of mentality they want to just keep in mind, is with trading, you're trying not to go big and go home kind of thing. You want the obvious, but that's another thing, is once you get really good, then the hardest part is greed. Okay, so right here, support breaks out, and some of you would just master, like literally by the book, know that that's a pin bar, it can't breach this price, you have your stop loss there, and you just carry it downwards. So some of you can already trade like a pro, what I'm just showing you, and I'm just going to show you this right here. I mean, here's an area that we see, but what we're looking for is this scenario here. Again, if you did not wait, the temptations are to sell right here, and then people that are looking at a smaller time frame, you might have got whiplashed here. This kind of been news, or you might have just thought that this thing was going to go down because it surpassed this price. Okay, this is something that people do not notice, but here's your closed candle if you want to wait for the break of this neckline to trade the other direction. And look at this thing. I mean, we're looking for this run. We want like an easy, clear-cut market condition that we can trade in. Okay, typically trading, again, just because some of you may be interested to say, okay, this thing is going up, and you can imagine that right here you might think that this thing is going to keep on climbing, and this just collapses on you. Okay, so just realize that these trade setups, they'll come for you. Okay, this is when you're converting to a real money account. Okay, so what I'm saying is you want to practice this so you can see that you're consistent, and then we're going to be talking about how to keep the emotions out of the trade to help you benefit and understand what to do in those kind of circumstances. Okay, so again, you can see double top, somewhat of a sell opportunity right here. Okay, candlestick pattern, trading back down towards this support and resistance area. I mean, look at this thing. I mean, it remembers these prices. Okay, and literally, I mean, again, this is the most accurate indicators. You can use indicators, but you want to keep it as simple as possible. 2 indicators, 3 at the most. Uh, but with range bound markets, you're just looking for certain patterns. You can see this, just observe this. There's a pin bar, it pulls downwards right around, you could say 40, 50, 60% of the candlestick, and then it doesn't breach this price, and then it pulls upwards. So you can imagine, just looking at this, it's all about placing the trade in the right place at the right time. Okay, and you can see you could place a trade here, you could trade it back down to this level right here. If you were more aggressive, this would have been the overall take profit. Now again, people thought or could think of to go long right here because they think that this thing is going to keep on going. Okay, they place a trade, then they put the stop loss in. You really want to get to a point where you understand the situation, what you're willing to risk, okay, where to put your stop losses, and where you want to put your take profit, or knowing how to move your stop loss into the green after so many candlesticks, okay, or have something manage your trade for you, okay. But look at these levels. I mean, here again, guys, a great example of where people would just think that this thing is going to continue going upwards, and it is tempting to get in. Then we have a smaller spike right here, and then we engulf here. Now this pattern itself would be probably a little tougher to trade personally, but you can imagine if you saw a big tail like this, this is something that you may consider saying, you know, it's rejecting a certain price, and then you can see how it just trades back down to a certain level. So this right here in this case scenario is something you just got to put yourself in check, say, you know what, I'm going to be either extremely cautious or I'm just going to be very conservative in my trade. Okay, like I said, what we're looking for is the obvious run. We're looking for these easier runs and trying to stay away from these tighter markets. Okay, so we want to be very selective in our trading, and that's something I want you guys to do, is just use horizontal lines right now, and just what I just showed you this in this webinar is just see how you can actually trade with it, just with support resistance. Okay, and we can kind of cover some of these other things to help you in your trading. So like I said, with trading, it is patience. I think that is probably the hardest thing that I think any trader has to deal with. Like waiting for the highest possible trade opportunity and looking for that trade. Okay, you have to realize that the market is running on its own schedule versus on your schedule. So that's something to also consider. And if you already have a schedule, or if there's already a time frame that you like, then that's obviously something that you want to see how you can implement these methodologies in your trading strategy. Okay. Any questions? All right. So again, we'll be covering more in depth in this next webinar. I'm just going to kind of just cover some key elements and just looking for some of these higher profitable trade setups. Now you can see you'll get to a point where you get enough practice and you'll just recognize trend lines that are a lot more reliable, and we'll cover certain techniques that can help you with these opportunities. Okay, but just a simple resistance support trade is you can see that this market bounced off twice. Okay, so this is something you would know of, and then what you would wait for is this right here. Okay, you're looking for it to commit downwards. Here's your false break, pulls back in. You can wait for the close of this candle. If you were really brave, you would have waited for this to come down and enter right there and keep your stop loss there and just roll this thing up. But again, this is more on a simulated standpoint. I want you to actually try it out yourself in a real live situation. Okay, typically you would wait for this to close and expecting this market to not wick all the way back down to this low here. Now, if it were to wick downwards, typically it would be around news. So for those that are more into the fundamental type of analysis, you can check your calendar. If it's a non-farm payroll or anything with the feds bringing something about, then that's when you could possibly expect a wick to wick you out. Okay, so a couple ways you can look at this is a break of this smaller trend line that I have on this chart. That closing candle could be your entry point, your stop loss behind the last swing low, and you just let this thing go. Now realize in trading you're not going to be 100% right. For traders that have looked at charts for a long time and all they're really facing is bad habits, either they're just not patient enough, or they're not disciplined enough, or they're not even focused, which is really common. Okay, and usually those kind of traders just developed bad habits. So those are people that need to just go back from the very beginning, and it's really hard to suck in the pride and say, I need to go back to the basics and make things more simple for myself. Okay, there's a comfort level of certain indicators and whatever, if you're using EAs or whatever, it's best to not only know why, if you haven't tested it already, why it's going to benefit you as a trader. Okay. Now, I think personally, so there's a lot of questions about that, fully automatic systems. If I didn't personally build it, then I wouldn't use it. Okay, and a lot of things is just relying on someone else's strategy, and it's typically crash and burn. And yeah, I mean, again, market conditions change. Some of them show outstanding results, but we can kind of cover that in another presentation on just understanding that simply just trading with simple price action itself is going to be more beneficial for you. Okay. All right. So let's actually show you this trade, and I'm just going to show you my mistake in this market. Okay. And what I was looking for, and I did take a great trade this week, but this is obvious support and resistance, guys, and I just wanted to show you this is on the day chart, so this is going to be something that swing traders can take advantage of and benefit. Okay, again, the market does not have to come back to the very bottom, so this is something that we would know of. You can see this long tail right here. Okay, again, depending if you're a scalper or not, or looking at a smaller time frame, this is where you would probably struggle in your trading. Okay, but typically you can see we hit a bottom here. It's pretty much a triple bottom, guys. Look at these little tails; they're about the same. So on a smaller time frame, this would be a triple bottom. So this market just rises back up to this level. When the market came down towards this bottom level here, you can see that this market comes back up to the resistance area. Okay, and you can see that this market has struggled in this area, and you can see that this is the candlestick that we would be waiting for, is this red candlestick. Okay, a little wick right here, you can keep your stop loss there, and you trade back down to this support level. Now I'm just showing you more of a simulated scenario, so like I said, you would want to try to test it out first before you use it on a live account. So right here again, support resistance is just a general area, guys. Once you get down to this level, once you justify this level, this is something that's considerably a double bottom. Look at where we're looking at for possibilities, back up to the resistance level. Okay, it couldn't breach this resistance level. You can see it ceilinged out. So we had this information displayed. Now again, if you're not patient, this long wick is a temptation to go long, thinking that this thing is going to continue going upwards. Now you would want to wait for the close. Now the closing candle for me is Mountain Standard Time, 6 p.m. or 5 p.m. depending on what broker I'm using. That's something you want to probably check in your calendar and see how it would be beneficial for you for these. So some of those people may look at the closing candle per day, per time, knowing at these resistance levels. Here we have an engulfing pattern. Okay, it comes up probably around 40 to 50%, you can see. And then you can see this market trade back down to the bottom here as the overall target. Gets to this bottom. Okay, I'm just showing you the price and how it's reacting. Okay, here we have a closing candle. We break upwards. So it's temptation to go long here, but if you're on a day chart, you definitely want to consider having a smaller lot size. Okay, and you can see that this mark comes back down. It can't surpass this close here. It's like a 2-wick area here. Okay, closes within, and you can see that this would be your stop loss, and you just trade back up towards that resistance area. Okay, this mark comes downwards, forms kind of a, this would be probably a market condition that's really tough, especially if you're on a smaller time frame. But you can think of this on a 1-hour standpoint. This would be the obvious run. You could trade it to this high, but you can see it kind of ceilings out over here. Now this is a reversal candlestick pattern. We've traveled quite a distance. Okay, so it's kind of, you see these little tails right here. In this case scenario, this would be a double top on a 1-hour standpoint or a smaller time frame. Okay, the market came up and hit that area of resistance twice, and then you can trade back down towards this level or back down to this support resistance level. And just look at how it just comes back and down. So there was this trading opportunity that was great for me for the week. Now I did not wait for, I was going to place the buy order right there. That's when I should have entered a buy because of this price right here and kept my stop loss where it's at right now. So this right now, I'm just going to just show you that this is a kind of a mistake, because this market may pull back down right around this area and then come back up towards this top here. Okay, but you can see these points that I just showed you are the high probable trading opportunities in this kind of market condition. All right, so market direction. Okay, the market really can only do 3 things. It can either go sideways, up, or down. That's it. Now what we want is something that is, again, in this case scenario, I'm just going to show you the Aussie dollar. We're just looking for the obvious direction, which is up. Okay, we want to just stay away from these kind of market condition where it's false break up, false break down. This is when traders tend to get really emotional. Okay, and we're going to be showing you some of the techniques that we have, how to have a better point of view and taking these opportunities. But look at this. I mean, this had resistance. Okay, so it kind of ceilings out, but then here you have the breakout. Okay, clear down here. You could have traded back up to this resistance here, but once it broke there, you can see how the market reacted in the general price right here. Okay, this is a double bottom, retest, retest, and then here it starts to pick that direction again. And look how many, I mean, this is a 1-hour chart, so this was actually 3 days of direction that we had. Okay, and if you're just trading with a small lot size, then you can handle these ups and downs. Okay, so really I think for some of you that might be something that you're not comfortable yet with, and that's why I want you to implement these strategies and be able to identify just the run. So right here again, this is kind of the consolidated markets. Okay, but you have this information display, bounce, bounce, and here's your double bottom, your neckline, your breakout. So here we could have either took the bounce to buy back up to resistance. Okay, but in all reality, guys, I'm just going to get rid of the trend line here. We just want to see these obvious runs, right? Now, the obvious runs don't happen all the time. That's the thing you got to do in your trading, is sometimes when you're looking at a chart, it looks like this. Okay, and then it runs. So again, just because it breaks a high does not mean that this market will continue going upwards. This case scenario, all we had to do was look for this support level here. So here, this is a trade opportunity that you could either break even or had a small loss, depending on how you reacted to it. But the thing is, you can see how there was a neckline right here, and see how price came back up and couldn't breach this price. Okay, and it trades back down towards the bottom level, bounces off of it a couple times, and this right here, again, you can move your stop loss to break even or simply have a small loss. This opportunity right here is you trade with the same lot size to make up the gains if you decide to use stop losses there. Or if you decide to use a bigger position, then overall you would come out with a smaller take profit in a net standpoint. Okay. But again, I'm just going to pull these lines back just to show you how amazing these lines are. Okay. This is a general area. Okay, so we already have some lines there, but look at this general area. Resistance. This is something I'm going to be interested in the next week or the next day. Trade back down to the bottom. See how it kind of does a triple bottom right here, guys? Then it starts to swing upwards. All you're looking for is this candlestick pattern. Double bottoms again. This would be something I'd be interested in for the buy opportunity back up to resistance. Here we may trade back down towards support. So this one you could either break even or simply had a gain because you did not expect this to continue going downwards. And again, guys, we're looking for this. These are the market conditions that we're looking for. Okay, you do not have to place a trade every single time you sit down in front of the computer. You want to see a market condition that is clean cut, easy to identify, and understand how it's going to react and know how to react to that trade. Because depending on how long you hold on to this trade actually did really well. So just to give you an example, here's a breakout trade, right, of this resistance, and here's your break. Depending on how long you hold on to it, it could actually end up as a loser. Okay, see that? So here you had about a day or two to react to it, to close out profit or move a stop loss to break even. And then here it would end up as a loss if you didn't do anything for a long time. Okay, so trading is about timing, guys. You could have the trade win for you if you wanted to. It just depends on how you read it and how you analyze the market. Okay, well, I really appreciate your guys' time here. I'm just going to have you guys look at those really simple concepts that we talked about. The next video that or webinar we're going to be doing, we're going to be talking about certain other techniques, patterns, and stuff like that. So join us for that, and we'll see you then.